This is Jonas Brothers' brand new single, Sucker. You're hearing it on Tom and Mikey, on Joy, and we've got a guest in the studio today.
We do. Well, because what happened is you and your mother and I had a little discussion. And,
of course.
You know, and I was trying to talk to her and she goes, all I want is Mikey to meet a good girl and buy the house and to move out. Yeah.
She did she?
Yeah.
You know, my mum, every week after listening to the show, she goes, what will they actually get me on the show? What are they going to think when I just have an Australian accent? And she's scared.
Oh, no, we're going to be putting the
hyped
accent.
her up.
Yeah. So your mum was very concerned about you buying a new house. So,
of course.
So not only does your mum and I both have millennials still living at home, I have seen that millennials have actually given up on the great Australian dream of buying their own home.
Oh, attack us some more, yep.
So I was so concerned about the rising cost of home ownership, how to get a loan. I don't know enough about how to even tell my children about how you get through this borrowing maze. So what I've done is I've invited in Phoebe Blamey from Clever Solutions to help break down the world of finance.
Hi, guys.
Hello, welcome to Joy.
Thank you so much for having me in.
We're so excited to have you in.
Oh, you're so nice.
Jump in, Tom.
Look,
Let's go.
Phoebe, before we get into the nitty-gritty of borrowing, I'd like to get your opinion on the recent Royal Commission.
Well, the Royal Commission was actually meant to be about banking and finance, banking and insurance, and not really so much about mortgage brokers, because mortgage brokers don't play a big part in
taking bribes
and being pushed into sales that they shouldn't really be making and stuff like that. We're self-employed people, so we look after our business and we look after our clients because that's how we make our money. The banks, the Royal Commission in the end decided that brokers shouldn't be paid a commission. And my concern about that, my really major concern about that, is that that's going to reduce competition in our banking industry. So it's going to mean that the smaller banks might disappear. They might not be able to be as competitive because we're their only chain of getting business.
Yeah, because I mean, I can go to a broker, and I know when I first went to a broker to get my first home loan, we got it from the Bank of Queensland.
Yeah.
Now there's no Bank of Queensland in Melbourne, but I got a better interest rate from them. I was able to deal with them because I actually had a broker who knew our circumstances and then looked out there for the best loan that suited us.
Which is so much about what we do. And lenders like Suncorp, ING, Macquarie all have really, really low rates at the moment. So their rates are about 3.5, 3.6 to get into a home. The banks are looking at over 4%, most of them, and they'll ruin that competition.
Well, won't they ever?
So that's my,
So if someone's going to looking for a loan, we're going out to there, what does a broker have over the bank? Why should someone go to a broker?
I can talk directly to a credit assessor. So I have the knowledge and skills to be able to say to you, okay, you're a first home buyer. You've got limited savings. I know which lender's going to suit you best. I look at how you spend your money and what you're doing and how you earn your money, and I can suit the bank to you, but I can also suit you to the bank.
Okay.
So
I like the sounds of that.
I heard somewhere at the moment that somebody had a speeding fine on their credit statement or on their statement, and the bank looked at that and said, well, you could get one of them a month, so we'll add that in as part of your... Is it really getting that hard?
It is actually getting that hard.
And the thing is, I try to explain this to my children. If you go into Westpac, or no, let's just say a bank, who knows where they are, and you ask for a loan, even just inquiring, that goes on your credit rating.
It's not allowed to go on your credit rating, but it's a thing that a lot of banks will do. So if your children go in, they're not allowed to do this. They'll do a quick credit check to see how eligible you're going to be for a loan. And it used to be just an approved or declined thing, but now you get a credit score, and a credit score is probably easier when you're dealing with a broker as well, because it's something we can speak to. So if you're self-employed and you've had a lot of credit inquiries because you're self-employed, we can speak to that rather than them just accepting the credit score and saying we're going to decline your loan because it's too high.
Because now it's happened as well if you're late on your phone bill. It could go against your credit score now as well.
So positive credit reporting came in July last year, and it means that every bill you've got, every credit facility you've got, they can see. And they can see what your behaviour's like. If you're 1 or 2 days late, it's not really an issue because most of the places can't be bothered reporting that. But if you're 30 days late or more on any bills, they can see it.
Right.
And that affects your credit score and it affects your behaviour and your ability to get a loan.
Well, we're going to continue talking about credit in just a second. I've got some pressing questions from millennials and Gen Zers. But first, Mrs. Glow is still in the studio and she loves the Veronicas. So we're going to go straight with If You Love Someone by the Veronicas. And we'll be back just in a second to talk about credit.
Best bit's going to watch Gabby Glow dance. It's hilarious.
If you love someone